Hey traders, this is Ron Hayden at Market Tamer. Happy hump day. Hope you're having a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues shall always be addressed with your financial advisor. Kick off here with the SPY, which I have a long-term bullish position in. We finished the day at 284.01, the all-time closing high from January 26th is 284.16. 15 cents from tying, 16 cents from breaking. The trend remains bullish ever since we got back above this 50-day. In orange, and then back above the red line, which is your 20-day EMA. We're pushing up here nicely, which is why we've said the trend here is bullish in the overall market because the SPY is, well, 500 companies. How about the Dow, the diamonds, up 0.72% today? Decent volume considering it's the summer. We're getting really close here to that all-time high, or not the all-time high, but the high from that trading range at the end of January, which is 254.89, 87 cents away than the all-time high to be the target. Q's really nice day, 1.4%. I previously had the trend line drawn in here. I've now extended it. This channel remains in play. That's why we just can't get too bearish. If you're a bear, the bulls just keep winning. Now, the stock of the hour or the day, right now it's around 7 p.m. Eastern. It's Facebook, otherwise right now called Faceplan. It's down over 20%. But before I go there, the stock closed at 217, right? With the stock after hours is down around 171, 172. So that's $28 just to get back to 200 plus another 17. We're talking $45, over 20% of this stock's value chopped in a heartbeat right now after market. So far, according to reports, the total revenue growth rates continue to decelerate in the second half. Facebook sees total revenue growth rates down in the high single digits for Q3 and Q4. This is according to reports. This is not good for the growth of the company. And this is why protective puts can save your bacon, save your butt. If this was a big position, for example, and I decided not to have earnings, and then you see a 20% capital loss in just this one position, it may take a year or years to make that back. Whereas if I would have had a protective put for a larger position, sure, the stock's down 45, but maybe the put has made $30 or $35, something bigger to help offset that loss. Plus, the short call that I could have used is going to help offset some of that loss too. Now, previously, I used examples like Netflix, which is a very expensive stock price-wise. I used Skechers just recently. And now I've used we'll use Facebook tomorrow in that video. We can see how this put could have really just saved our bacon. So if you don't know about Facebook's earnings, it's going to be painful without any protected puts come tomorrow. And then we'll do another educational example, all right? Here is UPS, United Parcel Service, up almost 7% on the day. If I go back to 1-year chart, the target right now on UPS is up there just north of 130, still about 10 bucks, maybe 8% higher. How about Ryder? RYDER, ticker symbol R. This was up 6.95%. Upside targets, this is basically an inverted head and shoulders pattern. We just powered through the 200-day moving average in purple, which acted as resistance in February, twice in March. Now you're talking 87.50. That is easily 10% higher. How about NOC, which, if you don't know, is Northrop Grumman? Stock lost 20 bucks today. Sounds like a lot, but it's only 6.5%. But here's the key. And I talked about this in a previous video. There's basically a trend line, and you can see how the stock is staying above it. But also the stock is staying above the 50-day in orange. It just keeps on the north side of it. Well, you get into basically April, we get below it. We hit the 200-day in purple. That's an institutional moving average. We come up, we hit the 50-day, we get above it for about 2 days, and then we roll right back over. And then as it was bouncing back up, it started to roll over right ahead of earnings again. Once a trend line is broken, you can see how it's coming up, getting rejected, coming up, and it can't keep going further. And then all of a sudden, these lower highs start to develop, which if I'm a holder of Northrop Grumman, this is all very cautious. We're no longer setting higher highs and higher lows, but lower highs and horizontal lows. Now with this stock down 20 bucks, I would have had a protective put in place. If I had owned shares, I'd be sleeping like a baby. Downside targets right now on Northrop Grumman, if I go back 2 years, it's pretty much down at this consolidation, a year ago, which is still 260-ish. You can make an argument and say there's still a 10% drop here on the stock, which is nearly $30. How about Tupperware, TUP? Check this out. Stock's down 16% today. I have to bring in all the data for Tupperware to find out where the next potential support could be. Now, when on this chart, it's a monthly chart, so every candle is 1 month long. A little bit of support at 30 because we had a high in '08 near 30, a low in 2010 near 30. So, let's say ballpark 10% lower. But then you're talking $10. That's astronomical, right? That's absolutely crazy. So Tupperware would be a stock. Once again, protective puts can save your bacon. All right, so I hope you found this helpful. Like I said previously, we did Netflix and we did Skechers as protective put collar trade examples in these videos over the past week. Now we're going to have Facebook, which is a stock that a lot of folks follow, and they're going to be wishing they probably had some puts here. Right now, the stock almost 10 after 7 is up around 173, so it's up maybe $1 or so, but it's still pretty much chaotic to the downside. So with that, I wish you guys a fantastic rest of the week. I look forward to seeing you tomorrow. Take good care.